What's going on, everyone? It's Nick Vazquez, and we are back with another Greater Toronto Area real estate market update video where we're going to look at the numbers for the month of October for the GTA as a whole, and then later in the video break down some of the numbers specifically for Mississauga and just talk about what's going on behind the scenes in the market right now. Before we jump in, if you do like seeing videos like this, you like seeing the stats, you like staying informed on everything that's going on in the market, please just give me a thumbs up. Would seriously appreciate it. It does help me grow the channel and it keeps me motivated to keep putting out videos. Also, just double check to make sure that you are subscribed, because if you do like this type of content, you don't want to miss anything that's going out in the future. Let's get started with total residential transactions. There were 4,961 transactions reported in October. That number is down 49% compared to last year, but it does remain relatively flat compared to last month. This year-over-year decline in sales was consistent across all market segments. So whether you're looking at a condo or a detached market, or you're looking at areas in Mississauga or Pickering or Toronto, it was pretty consistent across the board. Sales were down. Moving on to new listings. New listings dropped by 11.6% compared to last year. There were 10,390 listings reported in October, and this is the lowest number of new listings we've seen for the month of October since 2010. The number of new listings in the mid to high density market segment, so basically your condos, has declined more on a year-over-year basis compared to the single family market segment. So that's your detached, your semi-detached, and your townhome. This somewhat helps to explain why condo prices haven't dropped as much as the detached market segment have, for example. Now, there are other factors, like the fact that condo prices are just lower, so they have a bigger buyer pool. But this other stat that new listings are lower in the condo market segment does shed light on the fact that there's limited inventory, more buyers, so prices have remained pretty stable there. Speaking of prices, let's talk about the average selling price. The average selling price for the GTA as a whole is now $1,089,000. This average price is down 5.7% compared to last year. However, prices have pretty much stabilized in the GTA. This is now the third month where the average price has actually gone up. Comparing the average price from October to September, the average price has actually gone up by $3,000. And this is a trend that we've been seeing since July. The average price has been steadily going up since the summer. So, taking a look at the market as a whole, despite the housing market adjusting to the higher interest rate environment, prices have basically stabilized in the GTA. Prices are now sitting just under $1.1 million, which is exactly where I predicted prices would land in a video that I put out earlier in June. That video was basically just a comparison of how interest rates affect home prices. And in that video, I said that I think that the average price is gonna land somewhere between $1,050,000 and 1.1 by the end of 2022. And that's basically where we're at right now. Take a look. That's roughly where the market should be, just in that maybe $1,050,000 to 1.1 is where it really should be. So I think that's kind of where we're heading, but of course, I don't know for sure. You know what? Maybe I do have a crystal ball. Maybe you should be listening to what I say. Jokes aside, it was just an educated guess, and it kind of looks like I'm gonna be right, but you know, it's not the end of the year yet, and anything can happen that will change that. But in all honesty, there are a lot of factors pointing to the stabilization of the market. Yes, sales are down on an annual and monthly basis, but new listings are also down as well. The lack of inventory right now does help explain why prices have stabilized compared to earlier in the year when interest rates started going up and how fast they dropped. But now things are stabilized. An important thing to note though is with new listings at historic lows, if there's any sort of uptick in demand, that is going to cause the market to tighten, and it's going to make average prices continue to go up. Obviously right now there's a lot of short-term hesitancy and uncertainty in the market just because there is a recession looming here and people are just not really sure. Interest rates are higher, so there is a lot of uncertainty, and I fully acknowledge that. But in the mid to long term, that demand is going to come back and it is going to cause prices to go back up and bounce back. The Bank of Canada's recent messaging has indicated that their tightening cycle is starting to come to an end. That basically just means that these rate hikes are going to start slowing down and they're going to stop eventually. As a result of this messaging, bond yields have dipped, suggesting that fixed mortgage rates are going to go down as well, which would help affordability and potentially increase demand. So obviously if these rate hikes stop happening and if they start dropping rates, which they may do at some point in 2023, that is going to cause more demand. All of this combined with a target of 400,000 to 500,000 immigrants moving to Canada each year over the next several years leads me to believe that home prices are not going to drop too much further. Obviously, things are still very uncertain right now, and with the recession looming, there could be a bigger correction coming, and I'm fully aware that that's a possibility. But considering all these factors and even what we've been seeing over the last few months in the market, I do expect home prices to rebound substantially and probably be much higher than they are today, at least over the next couple of years. Main takeaway here, market is pretty much stabilized. We'll see what happens with the next interest rate hike in December. They probably will raise rates, but then we'll see what happens going into 2023, because I think that'll be really telling of what to expect for the rest of the year. Anyways, let's quickly look at the numbers for Mississauga. In October, there were 446 sales in Mississauga, and the average price of a home is now $987,000. That number is 1% lower than last year and 4.4% lower than last month. The average price for a detached home is just under $1.4 million, about $50K less than last month. A semi-detached is averaging in at around $1 million, about $10K more than last month. The average price for a townhome is $980K, about $15K more than last month. A condo townhome will cost you $793K, about $25K drop from last month. And finally, a condo apartment averages in at around $648K, about $10K more than last month. Anyways, that's it for now. I do hope you found this information valuable and informative. If you are thinking of buying or selling a house in the GTA, you want to talk about your plans to move, thinking about investing, anything like that, please feel free to reach out to me. Always love to chat, always love to discuss your options and figure out what the best move is for you to make, especially in these uncertain times. So just reach out and we can have those conversations. Thank you so much for watching the video. I do appreciate each and every one of you. If you found the information here valuable or informative, anything, did you learn something? Did it help you? Please just hit that thumbs up button. Would seriously appreciate it. Also, just double check again, make sure you are subscribed so you don't miss out on future videos and you can keep yourself informed on what's going on in the market. Until next time, stay safe, have a good week, and we'll see you on the next one.